Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, after a good day we had yesterday, it looks like we can have a positive start for our own markets today. The GIFT Nifty trends were pointing so, and even at the pre-open rates, we're looking off to a positive start. The global handover, that remains quite supportive because we saw that the overnight US markets ended mixed. S&P 500 and Nasdaq, both of these indices ended at record close ahead of the big tech earnings. If you look at Asia Pacific markets, that also did well, but however it has come off its highs because on the other hand, if you look at the Japanese stocks, that stood well despite the current leaders coalition party losing support in the upper house elections. But yes, all of the three factors, your yields, dollar, oil prices, they continue to remain well behaved, and that's a positive sign for India. What could be a worry for India, however, that is your trade deal with the US, which is likely to be delayed and not fructify ahead of the August 1st tariff deadline. That's what the reports have been indicating. So that could dampen any sentiment which could be going ahead. But like we are into the third week of the earnings season, more companies like Paytm, Colgate, that is slated to report the first quarter results today. Some reactions could also be seen. Now we'll discuss some stocks like Eternal and Ultratech with cement that came out yesterday late with its numbers. Also, we'll address your stock related queries, so keep posting them on our live feed. But before we delve deeper into the show, let's quickly take a look at the top headlines. Stocks on Wall Street end mixed. The S&P 500 posts its first close above 6,300. Nasdaq too hits a record ahead of big tech earnings. Asia Pacific markets open largely higher, while the GIFT Nifty is indicating a good start for Indian markets. Oil prices edged lower as trade war concerns increased worries over fuel demand. Gold prices hit 5-week high as US dollar and treasury yields ease. A trade deal between US and India is unlikely to take place before tariff deadline of August 1st. Now, US officials are set to visit India in August in the 6th round of negotiations. According to reports, the target deal could come by September or even October. Market regulator SEBI has allowed Jane Street to trade in derivatives market again. SEBI said Jane Street and its affiliates will refrain from any fraudulent activities. SEBI also added that the investigation is ongoing and this is not the final clearance. Jagdeep Dhankar resigns as vice president, citing health concerns and the need to follow medical advice. All right, if you look at yesterday's trading session, we did see that the Nifty has gained about 0.5% to end above that 2550 mark. Also, it is testing that 25,100 mark. So we'll watch out if actually Nifty reclaims those levels in today's trading session. But yes, part of the Nifty contributors that did come yesterday, that came from the heavyweight index like your HDFC and the ICICI Bank good performance. So the private lenders did lend to the top Nifty contributors as well. So as a result, we could see Bank Nifty, Metal, all of these indices contributed to Nifty's recovery in yesterday's trading session. On the other hand, if you look at the sectoral laggards, oil and gas, PSU banks, that saw sharp declines. And among the broader end of the markets, midcap stood out. However, the small cap faltered and ended the day in the red. However, today we'll watch out for some more of the earnings reactions which will be coming throughout the day. But in key earnings, Paytm and Colgate, these are the two main companies which will be reporting their June quarter performance. Now let's take a look at the fund flows data, how it stood out yesterday given the Nifty's rebound. FIs, that stood as the net sellers because they sold stocks which is about 1700 crore rupees in the cash markets. However, DIIs, they stood as the big buyers because they bought about 3500 crore rupees in the cash markets. Coming to the Nifty put call ratio, that jumped to about 0.96 from 0.78 level. So that indicates a little bit of a bullish formation could be anvil on for the markets. On the other hand, on the F&O ban, no new stock has been added, but the stocks that continue to be a part of the list, that includes the likes of Bandhan Bank and RBL Bank, and the stock that has been out of the list, that includes the likes of Angel One and Hindustan Copper. Now, just a couple of minutes before we go and address the open. But yes, the pre-open rates are looking like, we are heading off to a good start for today. Sensex up about 300 points in pre-open and Nifty also above that 25,150 mark. But on that note, let's quickly get on board with our technical expert of the show. Joining me is Nirav Harish Chheda of Nirmal Bank. Nirav, how does the market looks like? Yesterday we managed to reclaim back above that 2550 levels. But do you expect these volatile swings to persist amidst the earnings season?
Yeah, hi, good morning, Lovisha. Yes, looking at the overall setup, I do believe 25,000 should hold. Um, Very importantly, after yesterday, a lot of short covering action was seen in Nifty. Open interest was shed. You saw PCR jump. Also at 25,000 put strike, a lot of open interest built up is their highest for the puts, and that also denotes a strong support level. So I believe for Nifty, the likelihood of moving up from here increases dramatically after yesterday. Uh, it should actually move up towards 25,500 odd levels from here on the futures. So I would be a buyer at current levels and on some declines, with 24,980 being my support level or the stop loss level. So one can look to buy at these levels. Also supporting is the bank Nifty. A lot of open interest was shed in the previous two, three expiries for most of the bank Nifty names, especially the PSUs. And because of that, a lot of stocks are still light on open interest, and that follow-up selling is unlikely to come in. So, even Bank Nifty can perform quite well from current levels. I believe it can move up towards that 58,000 odd levels. So, you can look to buy Bank Nifty as well, especially the PSU banks if you're into the banks. The likes of SBI, Bank of Baroda, Canara Bank. A good support area for Bank Nifty is around 56,500 levels. So that will be my stop loss.
Okay, all right. Yesterday we did see good performance from HDFC and ICICI Bank. Nirav, do you expect this rally to sustain going ahead?
See, HDFC, after 4 years of underperformance, this stock finally broke out this year, and it is moving in a higher top, higher bottom formation. Post results, it again witnessed a good run up, and I definitely believe it has the legs to move up towards 2,200 odd levels. So one can look to buy the stock at current levels, and on declines, 1920 is a very very good support area, and that should be your stop loss. For ICICI Bank, this has been the leader in the banking space in the previous 4 5 years. You're seeing a continuous rally from 2020 onwards, a higher top, higher bottom formation, and this continues to lead. So I believe this can probably move up towards that 1550, 1580 levels as well. A good setup at this point. It is just breaking out of a flag kind of a formation, and I believe you can look to buy this stock at current levels. You can keep a stop loss of 1420 from a short term perspective, and 1550 is the first target that we are looking at.
1550 is the first target that you're looking at. Let's also talk about the broader end of the markets, because we're seeing a little bit of a mixed trends. Yesterday, mid caps stood out as the winners, but small caps that bled. How do you see the performance going ahead as we go into further deeper into the earnings season, Nirav?
Yeah. So, see, earlier the theme was both small cap, mid caps ran up, while large caps didn't see that much traction. Now, in the middle, start of the month, you saw a lot of large caps moving up, but again, during the week, only select large caps are moving up, especially the banks. Again, we are seeing participation going into the mid caps, and select mid caps at that, but most of them are seeing some consolidation, and I do believe there are areas where you can pick and choose good stocks. But yes, there's no real theme where you can just say that just buy mid caps or just buy large caps. You got to pick and choose now in this market, but still there are areas where alpha can be made. For the mid caps, at least for this week, I believe there is a good opportunity to buy. I'll be focusing on mid caps at least for the next 3 4 days, where good 5 to 10% can be made.
Good 5 to 10% can be made, but just 9 seconds to go before we hit the open. Yesterday we did see good momentum, and we are hoping for a good start in today's trading session also, because the global cues that remain fairly supportive. But yes, the first rates coming on your screen, Nifty above that 25,150 mark. So yes, we were hoping for a positive start, and yes, we are ahead into the green at this point. So yes, 25,166, that is the first level that is coming in from the Nifty 50 perspective. 0.3% gain from Nifty, and Sensex also doing well with about nearly 300 points gain or so. If you look at some of the other sectoral movers, if you look at the broader end of the markets, midcaps once again doing well with about, it's flat in the trade, but however, it gives out a positive bias. On the other hand, if you look at the small cap index, that also seems to do well. Yesterday, it was one of the negative, performer, and today it is, giving out like slim gains with about, 0.4% or so. On the other hand, Bank Nifty index continues to do well, 0.5% gains that is coming in there too. Auto index continues to underperform with about 0.3% cut. On the other hand, if you look at the metal index, yesterday also it stood out as one of the shiny performer, and today also it seems to be doing well. China did maintain its lending rates as stable, so we can see some good buying interest coming in from the metal counters too. IT index slim gains with about 0.1%. That is where we are at. Oil and gas continues to suffer with about 0.2% cut coming in there. India VIX, on the other hand, with about, it's volatile, but it's still at a depressed levels of about 11 or so. On the other hand, let's take a look at some of the large caps, shakers and movers at this point. And Bajaj Finance doing well despite the MD and CEO stepping down from his position after a tenure of 4 months itself. Also, the company will be reporting its first quarter results in 2 days or so. So we'll watch out for this counter. 1% gains coming in for Bajaj Finance. On the other hand, Trent doing well with about 0.8%. ICICI Bank continues to do well on the back of its Q1 results. 0.5% gains coming in from ICICI Bank. Metal counters, like I was talking about, that seems to be holding up well today too. Tata Steel, Hindalco, they are some of the top gainers on the Nifty 50. On the other hand, if you look at the way down, Kotak Mahindra Bank, it is scheduled to report its June quarter results on Saturday itself. So ahead of its Q1 numbers, 0.5% gains, 0.5% cut coming in there. One of the top loser on the Nifty 50. Reliance Industries continues to be, continues to lose in today's trading session too. 0.5% cut coming in there on the back of, a street was expecting much better results, but however, we can see Reliance Industries, with a losing streak of about, 0.5% cut coming in there. Bajaj Finserv, 0.5% cut coming in there too. Tata Motors, Tata Consumer Products and Dr. Reddy's Lab, they somehow continue to be some of the top laggards too. But let's take a look at how Eternal has been doing, because that was yesterday one of the top performers, and today it's seeing a sharp surge of about 10% or so. So yes, we did see that the company did report, decent set of results, but however, we did see that the profit dropped about 90% on a year-on-year basis to about 25 crore rupees, and revenue on the other hand, that grew by about 70% on a year-on-year basis. What did well was the Blinkit big business, because we saw that the B2C net order value, that surged about 55% on a year-on-year basis, and adjusted EBITDA, that dropped about 42% on a year-on-year basis. And during the quarter, Blinkit has added about 243 new stores too. How the brokerages have been reacting? Brokerages have been quite bullish on the counter, because Jefferies have upgraded the counter to a buy call, and they have also raised the target price. They believe that the growth has remained strong and the margin outlook has improved because of the competitive pressures that has been easing. And they expect, and the management commentary has been quite positive, so they're quite bullish on that as well. CLSA has also given out a high conviction outperform call, given that the quick commerce gross order value and contribution was above the estimate. So brokerages have been largely impressed, and today we can see the stock nearly testing that 300 levels too. Nirav, what is your view on the counter? Today also the stock seems to be doing well. What is the next target that you're watching out for?
Yeah, this counter broke out very late in the day yesterday, above that 270 odd levels, and today there's a 10% circuit, which will open in some time. But yeah, this is a very important breakout for this particular stock, because now it sends it towards its all-time highs, which are around that 305 odd levels. Once that is broken, you can expect this counter to move up quite aggressively. And I would be a buyer even at this level now, but on a closing basis. So if the stock closes around that 290, 295 levels on a closing basis, that is where you look to buy the stock, and it is likely that the stock will probably move up very aggressively up to that 370, 380 levels from there on. But yes, the breakout has come in and it is a positive for this particular stock. You can keep your stop losses around 272.
272 as a stop loss for Eternal. Let's talk about Ultratech Cement also, because that also came out with its Q1 performance yesterday. We did see that the revenue grew about 18% on a Y-on-Y basis, and net profit that increased about nearly 50% or so on a Y-on-Y basis. The sales volumes grew in Q1 amid the recent acquisitions, and the stock has been showing good momentum past the past 1 month. However, today the stock seems not to be doing well. A little bit of a profit booking on the counter. Nirav, how are you placed on Ultratech Cement going ahead?
Okay, so this is one stock which is moving in a higher to higher bottom formation, but there's a trend line resistance for this particular stock at around 12,550, 12,600 odd. And from the last couple of weeks, it is trying to break out, not able to do that. And I believe important close is required above this 12,600 odd levels. Once that is got for this stock, you can probably witness this stock really move up aggressively. Until then, just hold on to your horses. Do not, look to buy this stock at this point. Let it give a close about 12,600. Only then go ahead and buy for that target of around 13,600 odd. You can keep a stop loss of 12,200 post the breakout.
Okay, all right. That's the view coming in for Ultratech Cement too. Let's take some of the viewer queries that is coming on our live feed. The first query coming in from Debu K is asking the view on HDFC Life. HDFC Life, how do you see the stock on the counter? After the June top, the stock has been on a sliding trend, Nirav.
Yeah, so very peculiar for this stock is a higher top, higher bottom formation is in place. But it makes a higher top, which is about 10 to 15% higher than the previous top. Again, witnesses some consolidation, comes down for several weeks, and then again picks up pace. Now, the previous breakout was around 740 odd levels, and this stock has retested that level. I believe this stock has the legs to move up from here. The overall setup is good. So it has already witnessed 3 weeks of downtrend from 840 odd, 820 odd levels to about 740. I believe one can look to buy the stock at current levels. If you've already bought, you can place your stop losses around 740 and hold on for the targets of around 820 odd, because it has the legs to move up again from here.
So that is the stock that we need to watch out for HDFC Life too. Let's take another viewer query. Maheshwar Bhanu is asking the view on Colgate Palmolive from a medium to long term perspective on a technical level, and he's asking whether it is worth holding or adding more. Colgate, ahead of its Q1 numbers, the stock is down, Nirav, and so far this year also the stock has been an underperformer.
Yeah. So generally, this stock has been in a long-term uptrend. That uptrend started way back in 2004, and it witnessed a 20-year uptrend. So that has almost finished. So whenever such kind of an uptrend finishes, you witness at least a years of consolidation. That 1 year of consolidation isn't over yet. The downfall started in October 2024, and I believe it will go on at least up till October 25. A time correction is important for this stock, and that is why even looking at the chart, looks like this stock will still underperform even after the results. It is likely to come down towards 20 to 50, 2200 levels, probably lower as well. Don't see the stock coming up that early, so I'll not be buying this stock at this moment.
Okay, not buying the stock at this moment for Colgate. That is the view. Let's take another viewer query on that note. Prajit is asking the view on Borosil Renewables. The stock has been doing well from the past 1 month, 17% returns, and the stock also recently hit a 52-week high. Can the rally sustain, Nirav? What is your view?
I think it should. A lot of buying has gone in this stock, and it seems to have finished its consolidation. It has been consolidation for the last 3 to 4 years, and a lot of volume has happened around this 540 to 480 band, and now a breakout has come in above the 590 odd level, 600 odd levels, which is an important resistance, which was an important resistance for this stock. I believe this stock can move up towards 780 odd levels. One can look to add positions even here. And on declines, you can keep a stop loss of 590 for your longs.
590 for your locks. Let's take another viewer query then. Alex is asking the view on Jupiter Wagons. Jupiter Wagons, the stock seems to be not to be doing seems to be okayish in today's trading session with about 0.4% gain. However, so far this year the stock has been an underperformer. After May and June also the stock has been on a sliding trend. Do you expect the pressure to continue on Jupiter Wagons, Nirav?
I think this is only a BSE stock. I'll just have to find out just a second. So, okay, JWL. So basically, this stock has, as you said, a long, consolidation has come in. The stock has come down from 675 odd levels, 700 odd levels up to 300. But it is still in a downward trajectory. Lower top, lower bottom formation is in shape. It is also below the 50 and 200-day moving averages. So unless it really moves above these averages, I don't see it coming up. It is also falling trend line. Resistance area is around that 400 band. So all in all, a lot of resistance area is there for this stock. So I would not be buying this stock before that it passes this resistance area. At this point, if you're already holding, you can keep a stop loss of around 360 for your longs. If it goes below, the stock is expected to go down towards 300 again. And that is where a very good support area is there. It can consolidate for a bit at that area. So do not look to go long. If you're already long, 360 is the stop loss.
Okay, 360 is a stop loss for Jupiter Wagons. That is something that we need to watch out for. Let's take another viewer query on that note then. Satya is asking when he should book profits on Gland Pharma, 30% in 2 months itself. What is your view, Nirav? Because the stock has been on an upward trajectory since May itself, since April itself, and the stock is up about 40% or so.
Yeah, first of all, great that he's bought Gland Pharma. I've been advising this stock for quite some time as well. It has been in a long consolidation now. A breakout has been in the offing. Um, I believe this stock has the legs to move up to 20 to 50 at least from here. So you can hold on to longs at least for now. You can keep a trailing stop loss of 1890. That is a very good support area and also the breakout area for this stock. And after this breakout, this stock can move up quite aggressively up to 20 to 50. It has already come to 2000, but I believe it can still move up. So you can hold on with a stop loss of 1890.
Okay, 20 to 50, that is the resistance level that we need to watch out for Gland Pharma too. Let's take another viewer query on that note. Anand Roop is asking the recommendation in ITC hotels. Past 1 week, the stock has been showing good momentum, Nirav. What do you suggest? What does the near term look like for the counter?
The ITC hotels has broken out. It is already in a higher bottom trajectory. Importantly, it consolidated for a bit and broke out of its important resistance of 230 odd. I believe this stock can move up quite aggressively even now. It can move up towards that 275 to 80 band in the near term, so that should be a target at least. And once it reaches there, book some profits because most of the indicators will go into the overbought zone. Some sort of consolidation or retracement can come in, and when it does, again, look to buy around this 230 to 40 band.
Okay, 230 band, that is what we need to watch out for. Let's discuss one particular stock that came out with its Q1 numbers, that is your PNB Housing. The stock seems to be doing well with about 2% gains. We did see that the net profit has surged about 23% on a Y-on-Y basis, and the NII also grew about 24% on a Y-on-Y basis. And from April lows also, the stock has been doing quite well, 30% gains coming in. Nirav, what can we watch out for the counter? Today also the stock has been cheering the first quarter results.
Yeah, see, overall the chart is positive, but a small flag kind of a formation is taking shape with a breakout at around 1120. Once that is got, the stock will move up quite aggressively. So I'll be buying above breakout of 1120, and after the breakout 1225, 1250 is what I'm looking at. So buy above breakout, and you can keep a stop loss of around 1090 post breakout.
All right. Let's address one stock in focus because we have two viewer queries on this. That is your Bajaj Finance. The stock was the top Nifty gainer, but the stock has fizzled out some of the gains and has slipped into the negative territory. We did see yesterday that Anup Kumar Saha has resigned as the MD and director, and Rajiv Jain has been redesignated as the vice chairman and managing director. The company is expected to report its Q1 results in 2 days, but the past 1 month the stock has been fairly range bound. How the brokerages have been reacting after the step down of the MD and CEO? Morgan Stanley has given out an overweight call, but they believe that the MD's resignation is a setback to succession planning, yet the situation appears to be quite manageable going ahead. And they believe that the company is still poised to deliver about 25% EPS growth in FY26 to 28. The stock is down today, some sentimental reaction which is playing out on the counter. But from a near-term perspective, what is your suggestion, Nirav?
See, near-term wise, this is a resistance area. In the past 5-6 weeks or so, this stock keeps on coming down from 960, 970 band. And this is the fourth time it is coming down from this band, which is not a very good sign for this stock. If you look at the longer term charts, it is forming a flag kind of a formation. Again, with a breakout above 970 zone. So once that breakout comes in, only then I'll be looking to buy. At this point of time, I'll avoid the counter.
Okay, all right, you'll avoid the counter for now. Let's take another viewer query on that note. Now, Aman is asking the view on Cochin Shipyard. Cochin Shipyard, how does the stock look like, Nirav? Because the stock was on a stellar runaway, but from the June top, the stock has fizzled out most of its gains. How do you see the near term to pan out?
Yeah, see, this stock gave a very good return, almost 70% return from a consolidation. In fact, it doubled from 1200 odd in about 1.5, 2 months time. So, after such a big move, the consolidation should come in, retracement should come in, and that is coming. But having said that, it has got very good support around that 1770, 1750 levels, which is where I expect this stock to come. So another 100, 120 rupees, it can probably fall from here, but I believe that is where one could, add positions or buy fresh, because from there it can again start to move up. It would complete its retracement. So wait for those levels and then buy around support area with a stop loss of around 1650, and you can probably see 20 to 50 again coming in.
Okay, 20 to 50 it can come in. All right, just one last question before we let you go, Nirav. What are your top picks at this hour?
Yeah. So two mid-cap kind of stocks. First is Vatek Wabag. The stock, after a long consolidation, has broken out. I believe this stock can move up towards the 1600 level. So you can look to buy the stock at current levels. 1490 will be your stop loss. The second stock that I like is UPL, United Phosphorus. Yesterday, it witnessed a breakout with price and volume, and this stock can move up now up to the 750 odd levels. You can keep a stop loss of around 698 and go long with the target of 750.
Okay, those are the stocks that we need to watch out for. But with that, we have to let you go, Nirav. Thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. We did start off in the positive terrain, and let's take a look at how the rates stack up at this point of time. Sensex seems to be doing well. Nifty also above that 25,100 mark. Sensex up about 100 points, but however, it is off its day's high at this point. Sensex also has slipped, trimmed some of its gains. However, it's still above that 25,100 mark. On the other hand, what has contributed to some of the trimming of the gains, that includes the likes of your Nifty Auto Index that seems to be, deepened the losses with about 0.5% cut. Nifty Oil and Gas continues to suffer, and Nifty Pharma Index has slipped into the negative territory. On the other hand, Bank Nifty that continues to hold well, but off its day's high, 0.1% gains coming in from there. Nifty IT Index flat, but with a positive bias. And Nifty private banks also seem to be, a little bit of, there's a little bit of setback that is going on. On the other hand, Nifty IT Index is also flat with a positive bias. If you look at the broader end of the market, small caps and mid caps have flipped into the negative territory, while the small caps seem to be holding well in today's market. All right, with that, let's quickly move on to our next guest of the show. We have Anand Rathi, co-founder of MIRA Money, joining us. Anand, how does the market construct look like for you now? Because we are fairly range bound at higher levels, and earnings fairly have been, subdued so far. How are you assessing the valuations?
The valuations currently are looking not very expensive, neither cheap. What our belief is that this is a quarter of transition where we are moving away from single-digit growth to maybe double-digit growth in the coming quarters or so. So this is a quarter of consolidation, maybe a quarter of a bit of slow growth, which we are expecting it to be, right? And when you put that in picture, the valuation doesn't look cheap. But then when we see that okay, there could be a double-digit growth going forward, I think the valuation doesn't look expensive either. So it's a zone where the market is waiting for triggers, the market is looking for newer initiatives, new things to come by, and so it's a phase of transition and consolidation in our belief.
Okay. Anand, we have the US-India trade deal which is further delayed. Do you expect this to dampen the sentiment, or the markets have brushed off any of the impact going ahead?
While I can't say the word it's brushed off, but I think the impact is not going to be as significant as it was expected out to be in the month of April and May coming forward. Yes, market will be keenly watching out for the details of the agreement. They will definitely look at what are the sectors that will get affected badly more than impacted positively. In our view, it cannot be completely brushed aside. But the importance of one gave it, maybe a few weeks or a couple of quarters back is no more that important. I think market will go back to earnings, fundamentally what will impact the earnings, and that is what they will watch out for in the agreement.
Okay. Anand, how are you finding the banking earnings so far? Majority of the heavyweights have delivered their results. We did see HDFC Bank, ICICI Bank delivering, stable Q1 performance, but Axis Bank is where the disappointment persisted. So how are you, weighing in all of these performance, and going ahead, what do you expect from the banking sector, at least for the medium-term perspective?
We've been positive on banking sector for some time now because the valuation at which it was trading maybe at the beginning of the year was very attractive. Yes, as you rightly said, HDFC and ICICI have given bumper results. In our view, this kind of results will continue. Axis was expected to do not so great, and that is also as per expectation. In our view, with credit growth expected to come in very soon, and going beyond personal growth and getting into corporate growth, I strongly believe that banks are rightly placed at this point in time. Few of them may not be able to deliver as usual, but I think as a sector, banking looks promising at this point in time, and we continue to believe that banking as a sector is a sector that one should focus on, maybe even allocate about 15% of their satellite portfolio in banking sector.
Okay. What else are you, positive on at this point of time, Anand? Anything that you're finding interesting, given that we are into the third week of the earnings season?
One of the things that we are closely watching out is consumption. I know that FMCG as a sector is trading, has always traded at very high multiples, but I strongly believe that with rural recovery on its way, with monsoon looking good, though not very even, I strongly believe that rural consumption can be one of the one of the reasons why many of these FMCG companies can do well. Plus, if you actually saw yesterday's result of Eternal, it also turned out to be good. Of course, people are talking about its profitability, but we are always looking for revenue. In our view, consumption is one of the themes that we should focus on, with more and more coming in, money coming in people's pockets, thanks to what the government has done on the tax cut, thanks to what RBI has done on the interest rate cut. I strongly believe that consumption is just around the corner. Maybe by the end of this quarter, we will see earnings of these consumer companies doing well. So that is one sector that we can positively look out for. Banking is something that we are pretty positive about. Not so sure about pharma, not so sure about digital, but these are the two sectors that one can look for.
Okay. How are you approaching the auto sector on that context, Anand? Because we have seen quite dull and unimpressive monthly sales data figures as well. Do you believe that this is something that you would be underweight on for the time being?
We are right now, not very high on auto, but our belief is that at certain price point, auto as a sector will start becoming attractive. For all you know, it could be by the end of this week or maybe at the end of the month after all the results are out. But I still believe that auto as a sector doesn't deserve too much of a money at this point in time. But if the price corrects and if it offers value for the price at which it is trading, maybe one can look at auto. The call probably should be taken post the commentary of the management on how they see the overall recovery coming through, because our belief is that there is very not too much money in people's pocket at this point in time to look at discretionary spendings like auto. But if they start showing some positive news, at least around the commentary side, I think that is when we should or maybe probably look at some allocation in auto. At this point in time, no.
Okay. And what about the cement pack? Because we did see JK Cement, Ultratech Cement, all of them reported good set of Q1 results as well. So how are you placed on the cement pack? Do you believe the positive momentum could continue for the rest of the fiscal year?
Absolutely, because that's one area where the government will continue to spend a lot of money, whether through various measures that they have taken or giving out doles. I think that's one. Infrastructure is one of the areas where we strongly believe that one can have some allocation. Yes, cement as a pack has done well, and I think that will continue to do good with. With most of the bad months that they call is out of the way. I think a lot of these real estate companies also will act as a positive news for cement companies. So in our view, infrastructure companies, cement in particular, one can actually positively look at investing into them via some infrastructure funds in our view.
Okay, infrastructure funds, that is what your view is. You did mention and touch upon pharma as well, that that is something that you are a little cautious on, and now that Trump has hinted on several times on very high tariffs on pharma, do you believe that the tariff play out will take some time to play out more on the sector going ahead?
Yes, you're right there. Because when initially the tariff news came through, pharma wasn't given as much as importance or focus, if I were to use the right word. And people thought pharma has escaped the tariff news. But with more and more news coming in from the other side saying they may be looking at pharma as well, and India being one of the largest exporter of drugs, I strongly believe that pharma as a sector may have some headwinds going forward. While as a company, as a sector and companies in those sectors, most of them tend to do well. But with this headwind, a lot of money may not really chase pharma companies, and that can act like a consolidation zone before we get some clarity on the US tariff side. So in our view, it's a little bit of a consolidation phase. Maybe if you have made money in it, take some chips off it. I'm not saying 0% allocation in pharma yet, but yes, you need to be a little more cautious than what you were maybe 6 months back.
Okay. Anand, now that majority of the several heavyweights have reported their first quarter results, we had HDFC, ICICI Bank reporting Q1 results. We even had Reliance Industries reporting its Q1 results. Has your stance changed on how the growth, earnings growth, is going to pan out for Q2 and even for the remainder of the quarters for FY26?
Yeah, not really. These three companies that you mentioned actually constitute close to about 31% of the overall Nifty 50. So if I go by these three companies, especially ICICI Bank and HDFC Bank, I think things are looking better. But I strongly believe that this quarter is not going to be the best of the quarters. It's going to be maybe a subdued quarter, but it's a quarter where the transition is expected to happen. We continue to be very positive on earnings in general, especially in second half of this financial year. So we believe that good double-digit growth is quite possible, and that's why we believe the levels at which we are trading may be a level at which one can look at entering. It can go down 4-5%. Markets can always go down 4-5% at any given point in time. But these levels look not very expensive, neither cheap. And the earnings multiple, the growth is expected to be at least about single high or low double digit is what I would actually continue to believe in the earnings growth.
Okay, so it's a fairly valued market from your perspective. Anything that you're cautious at this point? You did mention upon pharma that this is something with which you're a little cautious on, but anything apart from that?
Auto is one of the things that we will want to watch out for, because if auto continues to not deliver great results, maybe the price at which it is currently trading can actually come down. So auto is one of the sectors that we may want to be a little cautious about. Over allocating into companies, especially in some small cap companies, is going to be a little difficult because the earnings at which they are trading is looking very obnoxious. So one needs to be very careful on choosing the right stocks in small caps. But other than that, I think most of the companies, at least at index levels, are looking like they're in a decent fair value or around the fair value zone, not very expensive. So that's why we believe at these levels there is, it warrants us to invest. Whether you do it over the next 2-3 weeks, whether you do it over the next 2-3 months is a call that one should take. But our belief is that the markets are looking attractive and can look up going forward once the Diwali or quarter around Diwali is around the corner.
Okay, Anand. All right, Anand, with that we have to let you go, but thank you so much for your time, and we hope that we connect with you soon.
Thank you so much.
All right, let's take a quick check of the markets, how we are standing at this point of time, because we did see a little bit of a trimmed off gains from the day's high levels as well. Let's take a look at how Sensex and Nifty has been doing well. Nifty up above that 25,100 level, so it has been sustaining above that 25,100 odd levels. Sensex also doing well with about 150 points up. Some of the sectors have slipped into the negative territory. If you look at auto index, seems not to be doing well. Energy, FMCG, IT, oil and gas, pharma, all of these sectors have slipped into the negative territory. What seems to be holding well in this market is your bank index, bank Nifty index, metal index with a little bit of a flat to positive bias. Media stock seems to be holding up well, and realty index with flat with very slim gains. So volatile swings in the market has once again is been quite persistent in the markets. If you look at from the broader end of the market, small caps has also trimmed some of its gains, and mid caps on the other hand had slipped into the negative territory with about 0.1% cut. So yes, we did start off with a good set of gains, but we have come off from the day's high levels, and we are trading off with about 25,150 odd, 25,100 odd levels on the Nifty 50 front. But we'll watch out for if any recovery could take place from the second half, and the strength could build up from the second half of the trading session. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.